Russell, how you doing?
Good, man. How are you?
Doing very well. Why don't we take a little moment here for you to introduce yourself?
Sure. My name is Russell Nursasov. I am a managing partner of Safe Storage USA and Safe Storage Investors. We are a private equity firm. And what we do is we raise money to acquire and manage self-storage facilities all over the United States, primarily in Midwest, Northeast, and we are expanding into the Sun Belt states right now. My background is single family, multifamily. Like most of us, I came into self-storage by way of other asset classes. What attracted me the most to the self-storage asset class is the fact of how scalable the business is and the simplicity of the management, well as, and we'll talk about it more later on in the conversation, but 70%, somewhere between 70 and 80, depends who you ask, of self-storage facilities in the United States are owned by mom and pop, meaning someone who owns one or two facilities. So institutional players such as public REITs, public storage, life storage, and extra space and the like, they own about 25 to 30% of the market. Now, where you go to a multi-family world, it's the other way around. About 80% of the assets are owned by big, very large players, and about 15 to 20% owned by mom and pop. So we have a competitive advantage in self-storage where there's still good deals to be had. And, there's also, we'll touch upon that later on in the conversation. The way to get and acquire off-market deals, which is what we do, what our company specializes in versus going to other assets where you're primarily buying from large institutional sellers. Well, the competition is fierce, I promise you that. It's very difficult to get a deal on the contract. You are competing not only with larger players, but there's a lot of new investors coming into the space. I guess the genie is out of the bottle, and people know about the asset and how great it is, and what kind of return we can generate. Because we tend to generate high yield than with other CRE commercial real estate investments. So I guess just an ability to provide better return to our investors and to be able to still to be able to locate and find off-market deals is what sets us apart. There are two ways to go about getting deals, whether it's self-storage or any other asset class. You can either go through the brokerage, in which case I would say most of the properties will be priced at the higher end of the spectrum, or what we do and what other groups do, you go off market. You try to get to the seller before the seller will be approached by the broker, because we can expedite the process, and we offer a few advantages, I think, versus traditional the brokerage. Number one, we will never waste our time. Okay, if we can do a deal, we'll let them know ahead of time, upfront. This is what we're going to do. We're committed. We're going to close in 90 days. Number two, there is no multiple bidding, which could be bad, or which in our case, I think, which is good. Not every seller wants to talk to multiple buyers or to go through a brokerage. There are some people, they just want to be, they want to deal with one person or one person only. And we offer them guarantee of closing. We offer them a fair deal, and we actually take a lot of time getting to know the seller. And we build the rapport. We build a relationship with them. So it's not only about the numbers, but we're also going to learn what is it that they're looking to do with that windfall of money that they're going to get. Are they planning to retire? Are they planning to get into another business? Are they want to reinvest the money? And based upon the answers that we're getting from them, we can structure the deal where it's a win-win for everybody. But basically, we have a team of people. Some of them are locally, some of them are VAs outside of the country. Our sole purpose and sole job is to make phone calls to the potential sellers and see if we can get somebody who's willing to talk to us, who might be looking to sell at this time, or not even at this time, maybe 6 months down the road. maybe 12 months down the road. But those are the deals that we're looking for because generally we can get a significantly higher yield and significantly higher return on those deals.
And this strategy allows you to buy outside of state as well.
Well, we're based out of New York, Long Island, New York, and we're yet to acquire a facility anywhere in tri-state area. So all of our facilities are purchased out of state. Just like I said, we are in Michigan. I just sold the property there as well. We are in Wisconsin, which is, in Midwest. We are in the state of Maine. We have a couple of facilities there. We're looking at North Carolina, South Carolina, Tennessee, Florida, Georgia. So yeah, the beauty of the business is that you don't need to be where the facility is at. We utilize what's called the remote management model. So everything is online, and nowadays most of the potential tenants, they start their research online. So it is important to be online, to have a good website, to have a good SEO, to have a good marketing. And then we have what's called the boots on the ground. We have somebody who's coming in to take care of all the needs of the facility on a daily basis, or maybe every other day as needs arise. So it allows us to be very nimble and also keep a very tight leash on our expense ratio as well.
And can you tell us a little bit more about financing options available in the self-storage space?
A very interesting question today. Very interesting question today. Well, market has changed. We've been in the space for almost 3 years, and we see the financing options. They're still available because I think the banks, as they learn about self-storage and as they see the returns that we generate and that the asset can generate potentially, I think it's no longer unloved child. I think it's one of the kids that they like right now. So the money is there. You just need to be able to find a deal that makes sense because they're looking for very specific criteria. They're looking for occupancy. They want stabilized property. So somewhere at 85% occupancy is what they're looking for. They're looking for the DSCR, which is a debt to service coverage ratio, somewhere in the vicinity of 1.25 or 1.3. The interest rates going up the way they've been for the last year, and the compression of cap rates, unfortunately, they have not expanded to where we wanted them to expand. The other option became very relevant recently is the owner financing. So owner financing is when you approach the seller and you have a conversation with the seller and you find out if there is a benefit to the seller to hold papers on the property for you. So instead of going to the bank and borrow the money, your seller becomes the bank. And it's a subject of a different conversation, complex, or it could be complex, but it's one of the ways that we offer more money for the property because a lot of sellers, they stuck on the numbers. So they have a number in mind and this is what they want to get, no matter what you tell them about interest rate and this and the other. But if we are to come to that number, Mr. Seller, we need you to meet us on our terms. And our terms would be the owner financing, where we can get a better interest rate or possibly even interest only for a fixed amount of time, preferably 5 to 7 years, which allows us to be a little bit more aggressive on the price and yet maintain the returns that we need for our investors. So owner financing is huge right now. It's one of the better ways to buy the property. Good question. Well, first of all, they need to be in the financial position to offer you an owner financing. When I'm saying financial position, meaning they should have either a lot of equity in the deal or they should have no debt on the property. Okay, so we're probably talking about your traditional mom and pop owner who purchased the property 20, 25 years ago, and they no longer have the mortgage on the property and they have a lot of equity. And also someone who is somewhat savvy, who understands the implication of being hit with a very large tax bill upon the sale of the asset, because their cost base is significantly less than what we're paying for the property today. So they're going to have a very significant tax bill on their hands after the closing. So offering owner financing to a buyer is one of the really interesting ways to minimize the tax liability and to spread that tax liability over a number of years. Whoa, okay, that's a whole conversation by itself. Tax advantages. As an investor, first of all, commercial real estate gives you an ability to accomplish multiple goals when you invest, whether it's safe storage, self-storage, multifamily, retail, or whatnot. It's probably one of the only assets that gives you appreciation, depreciation, cash flow, and all the other tax advantages, and it all happens at the same time. What I'm talking about is that let's say we bought a property this year for $1 million, and the property generates 100,000 NOI, which is a net operating income. If we had to raise that income by 10% to 110,000 next year, the property value is going to go asymmetrically higher, not by 10%, but significantly higher. So that asset already generated appreciation for you. At the same time, we use a lot of tax advantage strategies such as accelerated depreciation, cost segregation study, which will give you a very large chunk, especially in year one, and where you can take a significant depreciation against your income or against your other incomes. So you're getting appreciation of the property, depreciation of the property that allows you to write off a significant amount of money off your income tax. And hopefully you find a good deal where it also generates cash flow for you. So you're making money while the property appreciates, while you're using tax write-off to offset your other income. It's a win-win-win. And I don't think there are many other asset classes that will allow you to do that, with an exception of oil and gas or something like that. But very tax advantageous strategy to invest in the commercial real estate. When is the best time? Well, the best time was last year, and the second best is today, right? That's what they're saying. The best time depends on where you're at personally. First of all, it takes money to make money. So most of the groups will start taking anywhere between $25,000 to $50,000 minimum requirement for a limited partner to come in. So you need to have some disposable income that you do want to invest. Second of all, just make sure you invest in the right deal. What is the best time? Today is the best time. Yesterday was a good time. Tomorrow is going to be a great time. As long as you can find a right deal to invest into, and as long as you have a trusted partner in the way of a sponsor of the deal, general partner, what we call, and with the track record, with understanding how the deal needs to be run and what needs to be done to preserve the downside. Because basically we're in a business to protect the downside and make money for our investors, you know, with unpredictability of the current market, of what's going on right now, with the stock market going up and down every day. We don't know which way, you know, it depends on the wind. And with all the economic turbulences that's happening at the same time right now, you know, going traditional route when you have some money to invest might become a little bit of a challenge. So if you have some time, you should definitely educate yourself on the benefits of the limited partnership and investing in a commercial real estate. But specifically, I think it's today, man. I think it's today. And the other reason why I think it's today is the best time, because everybody is brilliant when market goes up. And basically, all you got to do is just buy a property, sit on it, and wait, and you know, because market kind of helps you in a way that it gives you that wind in the back. It kind of pushes you. So all of your mistakes, if you do any, will be covered and helped by the market going up. Now we're in a different market right now, and I think. With the risk come a lot of opportunities, and especially, I believe, coming the next 2, 3, 4, 5 years, there's going to be an unwinding of all the craziness that took place within the last 3 to 5 years. Well, all the money, easy money, cheap money were coming into the space. And some people got over their heads, and there's going to be some distressed properties on the market, on off market. And I think if you are well prepared for it, and you have capital, and you have systems in place, and the team to onboard and process and work with those properties, I think there's going to be some phenomenal opportunities going forward. So if you ask me again, when is the best time to invest? I think between now and within the next 24 months, I would say, because there's going to be deals coming our way, and we'll be able to capitalize on it. I'm not an economist. I'm a self-taught economist, I guess. I follow the market, and I follow the indicators, and I follow what other smart investors do. Very hard to predict. Very hard to predict. The same way nobody could predict a low interest rate forever, and then the same way no one predicted the rise of the interest rate and the velocity of that up move within the last year that we experienced. So predicting is very difficult. I think once you have a good deal, once you have a great deal that works in any kind of environment, if market's going to get better, great. If market's not going to change, great. We still have a phenomenal asset. But I think there's going to be some pain in the financial markets and stock market coming in with the next 12 to 24 months, and that's why we have a lot of investors approaching us right now. They're trying to diversify. So predicting, I can't, but I think once you have a deal and the deal works in any environment, I think it's just going to be even better. If the market's going to change, it's going to turn, and it'll be on an upswing again. Because right now the market is kind of flat, and a lot of groups are very cautiously optimistic, I would say. And a lot of money sitting on the sideline, waiting to be deployed. So these people are a lot smarter than me. So if they're waiting and they're looking for deals, I think that's a good strategy. We'll see some tremendous opportunities coming up. Tremendous opportunities. Actually, we had to hire a company last year. Great company. We enjoyed working with them. That help us identify not only our core values, but help us build all the processes internally in the office. And as a result of that, we had to identify core values, and so what we came up with is what's called SCALE. Can you see it on the screen?
I can. Yep.
Okay, perfect. So as a company, Sage Storage USA, our core values are success, commitment, accountability, listening, and ethics. And if you put it together, the goal of the company is to grow and scale up, because if you don't grow, you're dying. So we're constantly trying to grow, but you can grow in many different ways, in many different aspects. You can grow as far as the number of the facilities that you own, number of team members that you own, but you can also grow in as far as how much of an input you have on others in your community, how much money you donated to the charities, how much impact do you have on lives of your investors or lives of everyone that you touch. So for us, it's a scale: success, commitment, accountability, listening, and ethics. Ethics part, because everything we try to do with a lot of with integrity. But yeah, this is where we're at. This is our core values.
Yeah, this is fantastic to see. I like how it stands for an acronym as well.
Yeah, we try.
Yeah. Now, one last question here, Russell.
I'm 53 years of age, and I've done multiple business ventures in my life, and going from practicing chiropractor for 23 years to running multiple other businesses, and I can tell you that the biggest reward I get is when what I do has impact on others. And I know it sounds corny, but being able to help somebody, being able to change someone else's life, being able to help someone achieve their goals, and whatever their goals are, right? So somebody might want to put a kid through college and pay for it without taking loans, or someone might want to take their parents and take them on an expensive vacation in Europe, or whatever the goals are. And by working with investors, by helping them achieve their goals, in return, I get a lot of pleasure. And if they do better, we do better. When we do better, we can commit more resources to the charities that we support, to helping those kids, with cancer. One of the charities that we support. The other charity we support is where we help out a company adopt dogs from the shelter and then connect them with veterans who have, stress or post-traumatic stress disorder. And so we kind of in the middle of helping save lives for the animals and save life for the veterans, and putting together, making both of their lives better. So, the more we generate, the more we can contribute to those charities as well. And on a personal level, selfishly, I enjoy the fact that that we are growing. I enjoy the fact that we're scaling up. I enjoy learning every day, and because the more project you take on, the bigger the team gets. The more people you need to hire, the more training you need to do, and which makes us grow as people as well on a personal level. We do to multiple trade shows where we belong to my mastermind. One of them is yours. So yeah, it's a personal growth, and if you do right by your investors, if you do right by other people, the monetary compensation comes in secondary as a byproduct of that. So the goal is to build as many happy investors around you and help other people generate and make more money. And they grow, we grow.
Fantastic.
But that's a tricky question. It's a good question.
I had to hit you with that one at the end. Well, I appreciate it, Russell, and hope to talk to you again soon.
You got it, buddy. Thanks a lot. Next time we'll talk about your achievements and accomplishments.
Absolutely.
You got it, buddy.